This is the history of accounting. Have you ever wondered where there is an accounting? Don't worry, I've wondered too. Firstly, what is accounting, and why do we need to study the history of it? Unang-una, we'll delve into the past and see sino yung sisihin natin. Let's go. All over to the Mesopotamia and Egypt, they used clay tablets to record for their taxation. Now, let's jump forward to the 14th century.
14th century, where the origin of records, accounting can be traced from Renaissance and where the father of modern accounting was born. Yes, you're right. Frater Luca Bartolome Pacioli was born. Are you sure to call him Luca Pacioli? Luca Pacioli wrote the Summa de Arithmetica, Geometria, Proportionate and Proportionality, or in English, Every Arithmetic, Geometry, Proportion, and Proportionality, which was published in November 1494. It included a 24-pages treatise on bookkeeping, Particulares de Computes et Spectores, or in English, details of calculation and recording specifically on the subject of record keeping and book entry accounting. So, this is why Luca Pacioli was the father of modern accounting. Let's get going.
Oh, this is French Revolution. Are you wondering what is the connection of this one in accounting? For you to know, French Revolution started in 1787 to 1799. It was a transformative period of French history marked by significant social, political, and economic changes. The monarchy faced severe financial difficulties due to war, extravagant expenses, and mounting debts. The committee found the safety, policy, and monitored the financial matter during the radical phase of revolution.
Of new technologies and manufacturing industry lead to increase of volume of financial transactions, making accounting more complex. After the Industrial Revolution came the beginnings of modern accounting in Europe and America, where in this period rapid changes happened. After the French Revolution came the Industrial Revolution, where many businesses and industrial companies prospered in the year 1760 to 1830. During this time, accounting helped businesses on their managing their finances and operations.
After this event, many accountants developed into this modern accounting standard and forms, which is the present. The accounting pattern in the 20th century was developed around basic requirements for financial statements and audits. Beyond the industry's self-regulation, the government also set accounting standards through laws and agencies such as Security and Exchange Commission or SEC. How fascinating it is to learn the accounting history.
What do you think accounting means? Well, let me introduce you to it. Accounting is a systematic process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting, and communicating financial information. So, what is systematic process? Systematic process is composed of multiple steps that leads to a common end goal. So, what are these steps? Let's dig in some further information.
First step is identify. This step involves recognizing and capturing relevant financial transactions or events. Once identified, these transactions are meticulously recorded in financial records. Quantifying financial data is crucial while we are measuring this step because it involves assigning numerical values to transactions. After measuring, we go to classifying. This step involves organizing financial data into meaningful categories that are essential.
Let's get going on the process. So, verifying is the step which accounts go to cross-checking records, reconciling balances, and validating the data's integrity. Condensing the vast amount of financial information into concise report is the next step. Financial statement like the income statement, balance sheet, and cash flow statements provide an overview of a company's performance. Here, accountants analyze the summarized data. They interpret trends, ratios, and other indicators to understand the financial health of an organization. Finally, accountants communicate this financial story to various stakeholders, whether it's management, investors, or tax authorities. The goal is to convey a clear picture of a company's financial position and performance.
Oh, don't forget the economic events. So what are these economic events? So the first economic event is the business transaction, and the second is the non-business transaction. The business transactions are precisely recorded in the books of accounts because they have a tangible financial impact. Unlike business transactions, non-business events are not recorded in the books of accounts because they are lack of direct financial impact. So we know what are to be recorded in the book of accounts and what systematic process in accounting. But let's get deeper.
Don't forget the nature of accounting. So let's tackle this one by one. So the first nature of accounting is a service. This means accountants help decision makers by providing them financial information records that will guide them in making sound decisions. Speaking of sound decision, this means taking the time to fully explore the options and the possible outcomes of decisions, including discussions and reflections from others, making a better and deeper decisions. Including discussions and reflections from others. So the next nature is accounting is a process. This means doing a specific task step by step according to the objective targets.
Third is accounting both art and discipline. The word means art refers to the way something is performed, and discipline means accounting has a behavioral knowledge. Fourth, accounting deals with the financial information and transactions. This means accounting records of financial transactions and data, classifying these and finalize their result given for a specific period of time needed by their users.
And last but not least, accounting is an information system. Did you know that accounting is known and characterized as a storehouse of information? Because it collects data, processes, and communicates financial information of any individual.